So I've been wanting to do this video for a while about energy stocks, oil prices, stuff like that. About a year ago, oil bottomed out at $30 a barrel, and all these energy stocks were in the shitter basically. And now, as you can see, this is one of my favorite ones, Vermilion Energy. They pay a nice dividend. There it says 4.57. I think it's more around 6%. That's trade on the TSE. And they've continually increased their dividend over the years. As you can see, they're a high growth stock, and things are only looking up from here as the price of oil is going to go up from the OPEC decision there, November 30th, to limit the price of, or not limit the price, which in turn limit the price, but limit production from the OPEC countries. This will in turn boost the price of oil, no matter what anybody else says, cut production, and it's going to take a while for the US to ramp up their shale production and Canada to ramp up their shale production. And any big projects in Canada have been deferred for a year or two, so any huge growth is going to come in around 2020. It's not looking like anything from 2017 to 2020 is going to be anything substantial. So I expect a huge oil price spike in the next 2 to 3 years before all the big projects come back online. Shale producers won't really start kicking in gear until $60-70 a barrel, and basically by the time they start kicking in, the demand will be so high from India and China that we won't be able to sustain the demand, and the growth will be lagging because investment has been at an all-time low since the 1950s. Typically investment was around $15 billion a year, and the past couple of years has dropped around $6 billion. So with the world population growing and the huge demand coming from India now, we're going to have a huge spike in oil here in prices and whatnot. So here's another one that I've been following closely, TransCanada stock. You always want to look at Max, get a good idea. They're you can see they're a growth stock here. It says they're paying 3.73% dividend. I'm not sure if that's correct or not, but it gives you a ballpark figure. This is just a quick way, Google search your preferred energy stock. So TransCanada is another favorite of mine. Vermilion, like I said. Let's check out Gibson's Energy. I really like to invest in these midstream companies, as they have a lot of infrastructure in place, and they're not as directly affected by the price of oil. I mean, when the price of oil crashes, their stock crashes, but the value of their company isn't affected like a first-party producer, such as a drilling company, a fracking company. You know, the companies that live off the initial production off of oil and gas. You can see Gibson's is paying up to 7% dividend, and they had pretty steady growth up to, you know, the tail end of 2014. Started 2015, really dropped off, and then it's been kind of idling along there. But I expect this to be huge infrastructure in place. They've been in business for like 50-60 years. You can see it founded in 1953. Total assets $3.23 billion. Revenue in 2015 $5.5 billion. Like, and that's at the 2015. That's at the price of oil of 30-40 bucks a barrel. Now, you double the price of oil. What do you think is going to happen to their revenue? What do you think is going to happen to their stock? It's kind of a no-brainer here, guys. Everyone's worried about these shale producers, but they don't start making profits till 50-60 bucks a barrel. So they've had over 100,000 layoffs in Alberta. What have they had in Texas? They can't just ramp up production at the flick of a switch. They got to get these guys trained again. They got to get these guys all up to date on their safety tickets and and whatnot, and it's gonna be a huge lag. It's gonna be like what happened in after '08. Price of oil went down. Basically, took 2-3 years. Production started to ramp up again in 2012, 2013, and then yeah, look what happened. It overcompensated basically. Here's another one. AltaGas pays a huge dividend, pretty steady growth. See again 2015, just at the start of 2015 there, starts crashing, but she stabilized, idling along nicely, so posed for some good growth. And that, you know what, that's at today's oil prices, and we're gonna only go up from here. So you got to be optimistic. Things will be good. Things will turn around, and go from there. If you want a list of all my top picks, just comment below, and I'll sure to update you guys. I'm big on all the pipelines. Can't really go wrong. Enbridge, TransCanada, Inter Pipeline, Pembina Pipeline, all traded on the TSC. Some for you guys down in the States, like American stocks, or trade on the New York Stock Exchange, and that's another play you could have. They expect the Canadian dollar to drop in 2017, so it may be advantageous to invest a little bit in the New York Stock Exchange, even though our Canadian dollar is low. If it does drop from 75 cents to 65 cents, which they are predicting, you are picking up some free gains right there. Check out ConocoPhillips, Exxon, Shell. I think the Shell ticker, you want to trade on the Class B shares so you don't pay the withholding tax. Guys, try and do this in your TFSA or your RSP. These are dividend paying stocks. You are going to get hit a little bit of taxes. Not bad, but when you take your capital gains and you sell the stock, you can get hit. You do this in your TFSA in Canada, cash money. It's a no-brainer. Doing your RSP, it's a no-brainer. What else are we looking at? New York Stock Exchange, Phillips 66, Warren Buffett loves that one. I think they're more focused on the gas side, natural gas. ConocoPhillips is more on the oil side. They're kind of split into two companies there a few years ago. Either one, cash money right there. Lastly, that I'd like to point out, Chevron. They're doing quite well. They're planning big projects. In November, their stock shot up, I think, around 10%. Let's take a look at them real quick. They pay a good dividend, 3-4% at least. You reinvest that dividend when times, when times are low and the stock shoots up, you're making bank. You guys got to start getting your head in the game here, and start looking at some of these trends and just follow these trends. Like, look at that. See, end of 2014, boom, drop off, but look at it, steady growth, right back up. So we're at $55 a barrel right now, roughly. And what's going to happen when it goes to $100 a barrel? Look at back in 2012, 2013, when oil was high. You're looking at $100 a share. We're already back at $100 a share, and $117 a share, and growing. I think back in November, we can go back to the 3-month trend here. Oh, back in November, you can see huge growth. Back in November, we're looking around 100 to $105 a barrel at the start of the month. By the end of the month, we're pushing, 110, 115. It's a no-brainer. We're looking at good dividend growth there. Now, again, don't always go by what this says. Dividends fluctuate a little bit. Look at their revenue in 2015. What's going to happen in 2017 when the price of oil goes up $10, $15 a barrel? They're pulling in a net income, $4.58 billion. What's going to happen 2017 when the price of oil starts spiking? 2018, I already noticed the price of gasoline was going up 10 cents a liter. Price of oil goes up just a tiny bit. Boom, increased price of gasoline. Summer driving season's coming this year. More drivers on the road. More SUVs were sold in 2015 due to the low oil prices. All this stuff is compounding. Guys, we have one chance here, one opportunity. Get on it. Use your head. It's a no-brainer. All right, that's it for now. Comment below. I'll try and help you guys out the best I can. I just do this for fun. It's a hobby. Keep it as a hobby. you'll enjoy it a lot more than rather trying to frickin' get rich quick. This is long term, guys. We're looking at 5-10 years return. But then you got that money in the bank, you can put that somewhere else, you can buy a nice property, you can live your life. Okay, that's it for now.